even to this day, that was announced almost 4 months ago. To this day, they're barely even talking about it because it's so confusing and it's so convoluted. No one is actually launching it. They're trying to fix a problem with a complicated solution. If you want it to work, make it simple, stupid.
Welcome to The Flow, Real Estate and Money Show, a show focused on helping Canadians understand the different elements of real estate, mortgage, and finance. The goal of our show is to provide Canadians with the tools, information, and knowledge to have more success when it comes to their investing and real estate related decisions going forward. My name is Alex McFadyen, and I'm your host. I can't wait to get you into the flow.
It's like an absolute explosion in real estate and mortgage news. Who am I kidding? It's been 5 straight years of nonstop mortgage and real estate craziness, changes, rules, guidelines. Oh my gosh, it's going mental. Listen, Mark Carney came out last week and talked about reducing or eliminating the 5% GST for first-time homebuyers on new development properties. Is that going to move the needle? Maybe, maybe not. We'll talk about it today. Second thing, BC eliminated their secondary suite program, essentially admitting that it didn't work or changing their priorities without any given real reason. Inflation news is back. We're talking about inflation all over again. I thought we were over that. But next thing you know, Scotiabank and many of the economists are out there talking about inflation might be back in the economy, which could impact interest rates. And some of the banks are coming out with new policies to counteract the impact already of the tariffs that are in the marketplace. That's just a snippet of what we're going to talk about here today, but there's been a lot going on and I'm not going to make you wait. So let's get into it. Start with the big news here today of Mark Carney's announcement just last week. What was the specific day? I think it was March 19th or March 20th. They announced that they were going to focus on the new campaign, which is going to include eliminating 5% of GST for first-time homebuyers in Canada. But let's break down what he is actually saying and what the difference is between that and Pierre on the conservative side, and whether one could be different than the other. Oh, and some anecdotal feedback from some of the developers I reached out to and some other people in the industry to let me know their first early thoughts on this idea. Okay, so first things first, Prime Minister Carney is promising relief for first-time homebuyers of GST on homes under $1 million. The measure was unveiled in Edmonton, and it says that they'll save homebuyers up to $50,000. Now, in British Columbia, if you're buying a new property, you already saved the property transfer tax. Well, now you're going to add in the potential of GST. But let's break it down. So under the current rules, really quickly, new homes priced under $350,000 are fully eligible for a GST rebate. That's clear, with a partial rebate up to $450,000. Now, let's be honest, again, there's almost nowhere in the country where you're finding homes under $350,000 of any major population. So if you're going to Calgary, if you're going to Vancouver, if you're going to those surrounding areas, or if you're going to Toronto or Ontario, many surrounding areas there, it's very rare that you find a property that's currently exempt from the GST rebate. So it's about time that they made some changes to this program. It's been around since 2014 or 2013, a long time anyway. But the question is this going to make a difference or even make a dent in the marketplace? And the second thing to consider is whether or not this particular change is any different from what Poilievre said that he was going to do in October. Now, let's go back and rewind. Back in October, Conservative leader Pierre Poilievre said they pledged that they would remove GST on affordable new homes construction as part of their housing plan. Now, they didn't give a lot of feedback as to exactly who, what, when, or why. Is this first-time buyers or not? But they did continue to highlight housing inflation as one of the primary issues that they were trying to resolve in the housing market. So now you have Liberal Premier Mark Carney and Pierre Poilievre basically announcing a very similar program at the same time as we're dealing with these Trump tariffs and all this other stuff going on. But it seems to me that the Liberals have a little bit of an upper hand because they're announcing this at a time that they're planning to also run an election. So, of course, top of mind is very important, but I think it's important for those who are listening to distinguish, not to get too political, but to distinguish the difference between a platform that was already announced, as mentioned in the fall, versus one that is today. Either way, this is a win for consumers, Canadians looking to purchase new development properties. Now, the interesting feedback from this that I received from some of the developers I spoke to to had to do with a few things. Number one, the feedback that they gave us around the $50,000. So I got a text message, which I reached out to a large enough developer, not a massive developer, and without putting it in writing, he more or less explained explicitly that this $50,000 is just going to end up getting baked back into the price because of all of the other expenses and costs that they've been dealing with, plus everything going up in price over the last couple of years. So his feedback was more or less, this is not going to move the needle and it's just going to increase the price of new development housing. Very interesting consideration. I was kind of surprised that he was so blunt about it, but maybe I shouldn't have been. I reached out to a few other agents, real estate agents who I know who deal with a lot of new developments, and asked them if they had received any feedback. Now, none of them were able to confirm in writing, but I did pick up the phone, or they picked up the phone and called me and explained to me that very similar feedback, that they just figured that the prices of new development properties would go up. But they also agreed that this is probably going to move the needle as far as people potentially buying these homes, particularly if it is not just for first time buyers, but it's also for all home buyers. Now, let's talk about that for a second. We've got the incentive where CMHC allows you to do less than 20% down and 30-year amortizations for anybody, even if you're not a first-time home buyer over a 30-year amortization. I can tell you right now that the 30-year insured amortization solution, I've only done them for first-time buyers, never for a new development property since it was announced on December 15th. Now, that's just me and my team, but we're going back now 3 months. And in 3 months, we've dealt with plenty of tens and tens of first-time buyers, but not a single person buying a new development property and doing an insured purchase. They're all doing uninsured, which is 20% down or more. I think that's enough feedback to suggest that at this time, it's probable that if they do this only for first-time buyers, although it may move the needle to a degree, it probably won't have a notable impact. But if they take the road, or if Pierre Poilievre's government opts to do it for all buyers, then it is more likely to have a greater impact on the marketplace. And although we will see some of the developers opt to bake in the costs or increase their profits, I think the market in the end will dictate that to a degree. So regardless of what they have to say, it'll be interesting to see. Now let's fast forward a little bit and talk about something else here. Now, if you're listening to this and you live in British Columbia, then you know BC had a secondary suite home program that was launched last year. And to pull the details, I just went on the website to pull it up. BC's secondary suite incentive program was to help homeowners create affordable housing, and they were able to receive up to 50% of the suite construction cost to a max of $40,000. Never had a single person take this program, not a single one. In the entire time it was around, I can't say I had more than 5 people even ask about this particular program. And that's probably because it wasn't very well publicized. It was confusing. It was difficult to do. And I think for the most part, there were too many restrictions. There was combined gross annual income of all homeowners on title of less than $220,000 in the previous tax year. There was a requirement in eligibility that your family members could not occupy the suite. To be a forgivable loan, you had to rent it out at less than the market fair value. And there was like a 5-year timeline if the homeowner receives a full rebate, and then on and on and on. So the incentive was really just not there. They were basically trying to create affordable rent for people, and homeowners were the ones who were on the hook to do so. And 50%, I mean, $20,000, I don't think is enough for a lot of those people to take that point and actually make it something, a value for them, really, at the end of the day. So BC Homebuyer Secondary Suite Program was a complete failure. You're hearing it here. And I think I called it right from the beginning that this was a program that was not only going to be underutilized, but useless in the eyes of the average BC citizen who is considering trying to find a way to add a second suite. Maybe remove some of the red tape and actually just give a grant to people and police it some other way besides saying, hey, we're going to give you money, but you have to do this, 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 and this, and this. Otherwise, it's just useless. Remove some of the costs, remove some of the expenses, make it easier for people to put secondary suites in their homes, and just give a credit. Stop making it so freaking complicated. Okay, boom, done, off of that. But hey, by the way, we still have a couple of government home loan incentive programs for secondary suites. Although, again, they're too confusing for most people to even want to use them. There is the 90% refinance program that's available at very few select lenders. And even to this day, that was announced almost 4 months ago. And to this day, they're barely even talking about it because it's so confusing and it's so convoluted, and almost no one is actually launching it because of these exact same problems. They're trying to fix a problem with a complicated solution. If you want it to work, make it simple, stupid. Please. Please. All right. I should have started with that, but I'm going to end with that. Where do we go from here? Let's talk a little bit about inflation, guys. I feel like it's a major pivot to get back at this. As you know, just a few short weeks ago, the Bank of Canada cut interest rates by 0.25% down to, well, a lovely 2.75% today, which is where we are currently sitting. Now, I can tell you as a variable rate holder, I'm a very happy camper about those rate drops, and well, my wallet is too. I noticed some really interesting stats that I was bringing up here today that were provided. Now, a lot of people had these fixed payment variable rate mortgages. I do have them on some of my properties. And I was looking at the numbers here today that were recently announced from this is from BMO Capital Markets. The percentage of mortgages in negative amortization has gone from 22% all the way down to about 2% today. Significantly less people, which is giving people a little bit of cause to breathe in this market and feel a little bit better knowing that they might not necessarily be completely over their heads when their renewals come up in 2026 and 2027 for those variable rate mortgages. Thank goodness for all those people. That is one saving grace that we would like to consider. The actual stats are the first quarter of 25 saw a $27 billion decline in negatively amortizing balances to $16 billion down, which is 88% from peak levels. That's massive. We cannot understate that. And that is a very significant number that people are looking at. If you don't know what that is when you're paying purely interest on your mortgage. So there are a lot of Canadians who were paying only interest on a variable rate mortgage. They are not having that problem today, which is going to make people breathe a little bit easier right now. Did you know that with fixed rates and variable rates having come down, we're only 0.3 to 0.5% above the minimum qualifying rate today? Canadians can qualify for more mortgage money today since any time since 2022. Which basically means that borrowers who are opting for a fixed rate insured mortgage, specifically those who are taking a 30-year amortization with less than 20% down, can qualify for almost the same today as they did in 2022. We're only a little bit away from that number, probably about 8% off to 10% off of the high peak of 2022. With price points having continued to decline across the market, Canadians can now rejoice in knowing that they can qualify for more house, more mortgage money, and with more choice than they have been able to in the last 5 or 6 years. This is because the table has completely flipped in regards to what you can qualify for today as it relates to a mortgage compared to 2022. But it's also because there's more supply in the marketplace than we've seen in almost 7 years. That's right. We could be seeing the best time for Canadians to have purchased mortgages or purchased real estate, and nobody wants a mortgage, purchased real estate in a long freaking time. That combined with the spring market and banks getting more competitive, it looks like now could be the opportune time for someone to basically get low cost money and have more selection. But there is a concern, and this is where we started talking about this whole inflation issue. Now, I pulled up a little bit of an article here today, which also references Scotiabank's argument about the fact that they suggest there is concern of inflation coming back and coming back in a big way in 2025. And they're not suggesting this is going to be months or years away. They're suggesting this could be literally weeks away. Basically, looking at where things are at right now, we're looking at a few major issues. Inflation has exploded from 1.9% in January to 2.64% today. 37% of components in Stats Canada's Consumer Price Index are rising more than 3%, up from 24.6 in December, which basically says inflation is coming back up. That's not good. Year-end inflation expectations are surging. People and businesses expect inflation to go up. Also not a good sign. And according to the Bank of Canada, that is one of their biggest concerns. But don't panic. As noted, central bankers suggest Governor Tiff Macklem said, we focus on medium to long-term expectations, which indicates whether people believe that inflation will persist. If those measures shoot up, it will be a big warning sign for us. Well, we are seeing that, but not quite completely yet. So we're going to hold on and hang tight for a minute here. Now, there's a lot more to dig into it, and we're not talking about an explosion like 2022 where the Bank of Canada bumps rates all the way up back up to 5% again for a variety of reasons. One, all the renewals coming up, and two, there's not a high enough inflation for us to look back at this period of time and suggest inflation is going to come back in a big way. But between articles like this and Scotiabank coming out specifically and talking about the concern of inflation coming back, I think there is real reason to believe that we could be or are at the quote unquote bottom, particularly as it relates to interest rates in the near term. Now, does that mean that we might not see another quarter point? No. And does that mean things couldn't turn around and see the BOC lower rates again and again if our economy is hit harder? Also, no. Plus, we're in the spring market on the fixed rate side. And on the fixed rate side, banks will compress their margins as they're looking to pick up business, which they probably are right now. That being said, basically the entire market agrees that right now rates are quote unquote on the lower side of where they're going to be. And there's a very good chance that this is as low as they go for the near term. Hold on to your pants, kids. It's about to get very interesting. We'll see what happens here with the BOC and obviously their counterparts in the next couple of weeks as we see what the policies look like on the horizon. Right now, we've got a couple interesting things on deck. We've got the potential election. Whoa, that's a big one right there. We've got Canadian GDP Friday, also could be very alarming and concerning, and a whole bunch of fun US data and information, which will impact our market as it always does. The question I ask of you as a Canadian right now going into the election, is housing your number one concern? And if it is, are you concerned about this GST on new developments? Do you think this is the fix we're looking for? Is there a different thing that you would recommend or advise that people consider as it relates to, considering their options? I would love to hear in the comments below what your thoughts are on all this. And I didn't even have time to get into some of the other considerations, like, the fact that some of the banks are actually choosing to make their lending guidelines tighter for those who could potentially be impacted by the tariffs. Yeah, that's kind of a big deal and another thing to be considering. Listen, a lot of fear out there, a lot of concern out there. Every time there's a lot of fear and a lot of concern, typically speaking, those who are watching mass media tend to get afraid and avoid the marketplace. But you're not that person. Listen, there's a lot of data and a lot of information thrown around, and I just shot a whole bunch at you. If you're someone who is in the housing market or coming up for renewal, send me a message or my team, info@getflowmortgage.ca. You can find me on Instagram as @themortgagepug. We go through something called our Prepare Framework, which I've done a video back on YouTube not too long ago about, and you can search that up. We will walk you through that to make sure you make the right decision for your needs. Outside of that, any other questions that you have, drop them in the comments below. If you like this podcast, give me a like on YouTube or give me a 5-star review on Spotify. I hope you're enjoying it. We'll see you on the next one, and thank you guys.
That was an unreal episode of The Flow. I hope you enjoyed it as much as I did on my side right here. If you haven't already done so, make sure to check out all of the incredible resources that we have available. You can find us on Instagram @FlowMortgageCo. You can find us on our website, getflowmortgage.ca. And of course, don't forget our free first-time homebuyer masterclass that's currently available on our website for anyone who listens to the episodes. And if you loved what you listened here today, the only thing that we ask for is to share this with someone else that you think this could help. And hey, maybe leave us a great review online.